Hey everyone, welcome back to Corporate Decoder, the place where let's just say things are about to get a whole lot less stable for our company today. Alright folks, today we're diving into a report from TPI Composites Inc., a company that makes composite wind blades and structures for wind turbines. Now, normally we look at some major events that shareholders should know about right away, and oh boy, do they have some major events to announce, major events that shareholders should know about right away, and oh boy, do they have some major events to announce. Essentially, what we're looking at is the company announcing they've filed for bankruptcy protection. That's right, Chapter 11. This lets a company reorganize its debts and operations while still trying to keep the business running. The date of this filing was August 11th, 2025. So TPI Composites and some of its subsidiaries have officially filed for Chapter 11 bankruptcy protection in Texas. This is being done to try and sort out their financial and operational mess. They're basically trying to get their business and their debts in order. They're continuing to operate as a debtor in possession, which means they're in charge of their own business, but under the watchful eye of the bankruptcy court. They've also filed what are called first day motions. Think of these as urgent requests to the court to keep things running smoothly, like paying employees and critical suppliers, so the business doesn't just grind to a halt. Now, to keep the lights on and operations going during this bankruptcy, they've secured new financing. They've entered into a credit agreement for what's called DIP financing, or debtor in possession financing. This is specifically to help them get through the restructuring process. This new financing is coming from lenders who are essentially betting on the company's ability to turn things around. The total amount they can borrow under this facility is up to $82.5 million, and then up to another $20 million once the court gives final approval and some other conditions are met. Interestingly, a significant portion of this new funding, up to $55 million, can be from rolling over their existing senior secured term loan debt. So it's partly new money and partly restructuring of old debt. This DIP financing has a maturity of 9 months from the bankruptcy filing date. The interest rate is set at SOFR plus 9%, and it's payable in kind, which means they don't have to pay cash interest. Instead, it gets added to the loan balance. If things go really wrong with defaults, the interest rate can jump up by another 2%. So what triggered all this? Well, the very act of filing for Chapter 11 bankruptcy protection itself caused a default. This means all the company's obligations under its existing credit agreement and its convertible senior unsecured notes are now technically due and payable. We're talking about a lot of money here. As of the filing date, they owed around $471.503 million on their convertible on 5444 notes. So when they filed for bankruptcy, all of that debt, along with any unpaid fees and interest, became immediately due. Of course, the bankruptcy filing itself automatically stops creditors from trying to collect this money right now. There's also a mention of Turkish unsecured credit facilities. Because of the bankruptcy filing, lenders for these facilities have blocked access to a big chunk of the company's cash held in Turkish banks. The amount owed there is around 71.2 million euros, and the company expects this debt will likely be settled by liquidating those Turkish assets. Now for some really bad news, or at least news that signals a significant shift. TPI Composites received a letter from Nasdaq telling them their stock will be delisted. This is a direct consequence of filing for Chapter 11. They're not even planning to appeal this decision. Trading of their common stock was set to be suspended at the opening of business on August 19th, 2025, and then their stock will officially be removed from the US stock exchange. The company is putting out a strong warning to investors. They say trading their stock during the bankruptcy process is highly speculative and carries substantial risks. They also point out that the stock prices might not reflect what actual recovery shareholders might get, if any. In fact, they expect that current shareholders will likely receive nothing and their shares will be cancelled as part of the bankruptcy plan. This means shareholders are probably looking at a complete loss. They also expect their stock to move from the Nasdaq to the over-the-counter or OTC market, which typically means lower trading volumes and less transparency. The report also includes a section on forward-looking statements, which is pretty standard. These are basically statements about what the company hopes or expects to happen in the future, like how they'll operate during the bankruptcy or what might happen with their stock. They're using words like may, ettens, and potential to signal that these are not guarantees. And then they list out a whole bunch of risks associated with all of this. These include the general difficulties of bankruptcy itself, like getting court approval for everything they need to do, including that DP financing. They also mentioned the huge legal and professional costs that come with bankruptcy and how that will affect their cash or liquidity. The longer they're in bankruptcy, the more money this drains. Another big risk is losing key employees. When a company is in this much trouble and facing so much uncertainty, it's hard to keep good people around, and the company acknowledges this as a major concern. And of course, the delisting from Nasdaq and moving to the OTC market is itself a significant risk factor. The report also lists exhibits, and the key one here is Exhibit 10, one which is the DIP financing agreement itself. It's mentioned that this agreement is filed as part of this report and incorporated by reference, meaning you can go find the full details there if you wanted to really dig in. The other exhibit is just the interactive data file included with these reports. Finally, we have the signature block. William E. Sewick, the president and chief executive officer, signed off on this report on August 15th, 2025, confirming all these events. Now, looking at TPI Composites' situation from a broader perspective, it's clear the company was in deep trouble. Filing for Chapter 11 is a last resort, and the delisting from Nasdaq is a very strong indicator of just how serious things have become. While the DIP financing provides some immediate relief, it's a short-term fix. The fact that they expect current shareholders to be wiped out signals a deep fundamental problem with the business model or its execution that even bankruptcy may not be able to fully resolve in a way that benefits existing equity holders. The company is essentially trying to survive by restructuring its massive debt pile and hoping that the core business of manufacturing wind turbine blades can become profitable again under new ownership, likely from their senior lenders, who are stepping in to recapitalize the company. The risks are immense and the path forward is incredibly uncertain. It's a survival play, and for investors who are holding shares before this public announcement, the outlook is extremely bleak. We'll be watching to see if they can indeed reorganize and emerge as a viable entity, but expect massive turbulence along the way. Alright, that's our breakdown of TPI Composites' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.